perhaps not as surprising as some of the bonus reductions at other banks, given what Deutsche Bank's going through. But the tension here, Michael, is the same, which is retaining talent. And in this case, retaining talent, on a kind of a burning platform. So how serious is this for Deutsche Bank, or how necessary?
Yeah, I mean, you laid out the dilemma they're facing right now, which is it's been a tough year at the bank, and you want to try to keep your top performers. But Christian Sewing has committed to these cost cuts, and to meet the goal, they need to cut about 8% in the fourth quarter of their overall costs, not just on pay, but pay is the biggest lever that banks can pull. So I think that's why you're seeing this type of reduction.
Can you give us a bit of context, Michael? How many people might be affected, and in terms of average bonus size, are they as big in Europe as they are in the States, for example?
Yeah, they tend to be a little salary weighted because of some of the restrictions and rules around bonuses, but this is a big piece of the pie for a lot of bankers, a lot of traders, and as our story says, across the bank, you're looking at probably a 20% reduction, but in the investment bank, it's more like 30. So clearly the investment bank taking the brunt of this. And the pool, this is not the first year they've cut it. It's been shrinking over a number of years. So you're talking about, at an already low level being brought down further.
One interesting kind of element here is this notion that expansion will be on the fixed income side of things for Deutsche Bank. It happens to be a side that most banks are doing pretty well in right now. And I imagine of all of the places where you're trying to get or keep talent, that's going to be a tough one. That's the hottest market at the moment in banking. How difficult will it be for Deutsche Bank to live up to its expectations there?
Yeah, I mean, that's something that all the analysts are going to be watching when Deutsche Bank does report annual results, because the U.S. banks had a major relief in fourth quarter, kind of made the year more palatable after what was a tough first half. So can Deutsche Bank live up to that? We saw some major numbers from J.P. Morgan, from Morgan Stanley, huge increases there. Can Deutsche live up to that? Perhaps not, but fixed income is where they're making their bets, because equities are largely getting out of.
Is the hope that investors will be pleased with this kind of action? It'll send the stock price higher, and if any of your bonus is in stock options or what have you, it'll make up for that. It'll offset the decrease.
Yeah, I think that's the hope, and because a lot of the traders have previous year's pay in stock, that's kind of the hope, is the offset of a decline, of a rising stock price, which they haven't had in the recent years. So I think, the big question is, how much can you cut costs without it impacting revenue? And in the third quarter, they held up pretty well on that metric. And that's the question, can they keep that going, of keeping revenue stable or even growing a little bit as they go through this cost-cutting program?